Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Texas Instruments Incorporated, a global leader in analog and embedded processing semiconductors, known for its broad portfolio of products that are essential in many electronic devices. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Texas Instruments has a long history of innovation in the semiconductor industry, but from a behavioral finance perspective, how do biases like status quo bias and loss aversion influence their decision-making, especially in areas like art and capital allocation?
Status quo bias is particularly significant in Texas Instruments' approach to its core business areas, analog and embedded processing. TI has been a market leader in these segments for decades, and this success can lead to a preference for maintaining and optimizing existing products and processes rather than aggressively pursuing new or untested innovations. This bias towards the status quo helps TI continue to serve its established customer base effectively, but can also slow down its adaptation to emerging trends or disruptive technologies. Loss aversion also plays a crucial role in TI's strategy, particularly in how the company manages its capital and invests in new projects. TI is known for its disciplined approach to capital allocation, focusing on generating strong returns on investment and avoiding unnecessary risks. This focus on avoiding financial losses drives TI to be selective in its R investments, prioritizing projects that are likely to yield steady, long-term returns rather than pursuing more speculative opportunities.
And this focus on maintaining core strengths and disciplined capital allocation has helped Texas Instruments remain a reliable and profitable player in the semiconductor industry, appealing to both customers and investors who value stability and consistent performance.
Exactly. TI's strategic use of status quo bias in optimizing its existing product lines and loss aversion in capital allocation appeals to investors looking for a company that prioritizes financial stability and long-term growth. However, this approach also means that TI must carefully balance the need to innovate with the importance of maintaining its established market leadership, particularly as the semiconductor industry continues to evolve.
Let's talk about diversity, equity, and inclusion at Texas Instruments. As a global semiconductor company, DEI is particularly important for TI. How does this intersect with behavioral finance?
TI approach to DEI is essential, especially as the company operates in a highly technical and innovative industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance TI ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows TI to attract and retain top talent from various backgrounds, which is crucial for maintaining its competitive edge in the semiconductor industry. For investors, TI focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help TI build stronger relationships with customers, partners, and communities, which is vital for long-term success in the global market.
Investors are increasingly considering DEI when evaluating companies, especially in tech and manufacturing, where innovation and the ability to address diverse market needs are critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, TI not only improves its ability to serve a broad range of customers but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Texas Instruments operates in numerous countries, providing semiconductors that power a wide range of electronic devices. How does the company adapt to different markets, and what role does behavioral finance play in this?
TI Global strategy involves tailoring its semiconductor solutions to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on reliability and performance. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. TI ability to navigate complex international regulations, such as those related to export controls and environmental standards, allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with geopolitical instability, regulatory changes, and economic fluctuations. By ensuring that its semiconductor products are relevant and compliant in different regions, TI can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for Texas Instruments, especially as they face competition from both local semiconductor manufacturers and other global players. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. TI focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the semiconductor industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global technology standards, environmental regulations, and competitive pressures.
Now, let's compare Texas Instruments to other companies in the semiconductor industry like Analog Devices, Intel, and NXP Semiconductors. How do the behavioral finance dynamics differ?
TI dynamics are often compared to other semiconductor giants like Analog Devices, Intel, and NXP Semiconductors, particularly in their approach to innovation, market expansion, and competition. TI's strength lies in its leadership in analog and embedded processing, which appeals to investors looking for a company with a stable foundation in essential semiconductor technologies. Analog Devices, with its focus on high-performance analog, mixed signal, and digital signal processing technologies, appeals to investors interested in a company that is driving the future of precision analog solutions. Intel, known for its dominance in microprocessors and data-centered solutions, attracts those looking for a company with a broader focus on computing and AI. NXP Semiconductors, with its strong presence in automotive and secure connectivity solutions, appeals to investors interested in companies that are leading the way in automotive electronics and EOT. TI behavioral finance dynamics are shaped by its reputation for reliability, disciplined capital allocation, and global adaptability, making it an attractive option for those seeking stability and growth in the semiconductor industry.
And unlike Intel, which has a broader focus on computing and data centers, Texas Instruments' strength lies in its leadership in analog and embedded processing, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For TI, the focus on analog and embedded processing leadership, disciplined capital management, and global reach provides a unique value proposition in the semiconductor industry.
To sum up, Texas Instruments' approach to business is deeply influenced by behavioral finance principles, whether it's through their innovation strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Texas Instruments' stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.